Hello traders, Steve Ganz here, continuing on the series of the trade known as Buckle Up Buttercup. So I'm actually out of the office this week. I'm up in the mountains here in California with some family, and I mean beautiful foliage and trees in the background. So anyhow, really enjoying that. All that said, I did make a couple adjustments on this trade this week that I want to share with everyone. I'll get to those in just a second. But I will say this trade has been one of the most difficult trades, and one of the trades that I've had to adjust more than any other trade that I can recall in recent years. So, a case could be made at some point for just pulling the plug on something that gets that erratic, but I'm determined to try to see this through. Now, this thing expires next Friday, so one way or another, we're going to be done with it then. So, anyhow, let me just pause here a second, and we'll pull up the trade and start going through the changes that have been made. Okay, so these are all of the many adjustments that this thing has gone through. Again, normally under normal circumstances, I might adjust a trade, once, twice, maybe 3 times. I mean, this thing's on 1, 2, 3, 4, 5, 6, 7, 8, 9 adjustments now. It says 8 here, but that's because I actually didn't name these first couple adjustments because I wasn't anticipating having to do that many of them. So all of that said, this thing started, let's see, back on September 13th. So let's just take a quick look at our market then. So this is where our market was on September 13th, and we went from 4,500 down to about 4,200, which precipitated a number of adjustments. And then we started rallying back hard, which precipitated more adjustments. And now we're going through this sell-off. So, if the market stays in a general range like this, the butterfly trade is a very forgiving trade for, maybe 100, 120 points one direction or the other. But when you start talking, 200, 300 points, particularly when you go through an increase in volatility. So you start off in lower volatility and that trade moves quickly to higher volatility. That can create some problems with these trades. So let's go back now and look at the different cycles this thing has gone through. So if you're wanting to see the changes up to number 5, I would urge you to go and watch the prior videos, which will be listed, of course, in the whole start to finish series. But then on the 20th, I came in, and this thing was, let me just move this to expiration. I think it's a little bit easier to see that way. So on this particular day, we can see this was, let's see, show more. On the 10th, I removed a lot of the downside risks. So prior to this trade had a long tail on the downside. The market had ripped up so much that I was like, you know what, I can take off some of this downside risk at the time, and I could take that off for just a few cents. So I went ahead and did that. I went ahead and pulled off that downside risk. Now keep in mind, our market was up here at about 4,400 at that time. So I was taking a fair amount of pressure to the upside, but I had an opinion that our market was near a reversal point. And in fact, that was somewhere right around in this general range here that I was anticipating a reversal at what had been this prior high. Now, that didn't happen. The market continued higher yet, which created more pain for this trade and prompted yet additional adjustments. So if I come back in here and we look at the next adjustment, so the next adjustment took place on the 12th. I finally got the pullback I was waiting for. So as I started to get a little bit of a pullback here, we dropped back into probably about the 4,300 area or so. At that point, I started taking off some of this upside risk. I thinned that out a little bit. Now I'm going to show you all of my actual trades and fills here momentarily, and I'm also going to show you the strikes that are remaining in this trade. Somebody had mentioned before that I wasn't showing those, but just to be clear, on OptionStrat here we can see exactly what each one of these positions is right here. So there's 2 legs here, there's 10 legs here, there's 5 legs here, there's 2 legs here. So OptionStrat very clearly does in fact show exactly what's taking place. Anyhow, so that was the position then. Again, this is on the 12th. So let's go back now, and then on the 13th, today, I actually thinned out, as the market was pulling back here, I actually thinned out a little bit more upside risk. So now I am going to go ahead and I'm going to pull this back to see if we pull this back to today, we can see that I'm still down significantly in this trade. I'm down $7,700. Prior to these adjustments, I had been down at one point almost 14. So this trade is recouping at this point. It has a week left on it. So decay is going to happen pretty quickly, which is what I'm counting on. And I'm basically, if we look at our deltas here, we're pretty much delta neutral, which is ideal. We've got $457 in theta decaying out of this on a daily basis. So if I march this forward till sometime here next, Tuesday, Wednesday, somewhere in that area, this is going to be cut in half. That loss would be cut in half. And if I was so brave as to carry this thing, all the way into expiration, I could, squeak maybe a little bit of profit out of this. That's not my goal at this point. My goal on this one is just to diminish the losses. Now, that said, if I have an opportunity, if our market climbs back up a little bit to where I'm, under the center of the tent here, and I can start rolling in these wings, taking risk out on the upside and downside, I still may be able to semi-safely pull some profit out of that. But again, that's not what I'm counting on at this point. At this point, I'm just counting on trying to maybe cut this loss significantly from where it is. I have already cut it very significantly, but hoping to cut it a little bit more. Now, let me just pause a second and I'll pull up the details on what trades have taken place, when they took place, and where I'm left right now. Okay, so this image here shows each trade that took place, the strikes, and the date and time that they took place. Then, so these took place on the 10th. Then on the 12th, I did 2 separate adjustments, one of them at 7 a.m. This is Pacific time, of course. One of them took place then later in the day at about noon. And then here today, on Friday the 13th, I did this adjustment. And then these are the strikes that are left in this trade at this point. So that's kind of where we're at on this whole thing and the general configuration of this trade. And again, this was a very complex, confusing trade. I get it. But again, I committed to show this start to finish. I can also say this is one of the worst trades financially I've had in a long time. Most of my trades never hit this level of stress, but the reason it did is it was a butterfly. It was a larger butterfly. It was put on in a lower volatility environment, again, back on September 13th in here. And then when you get a move like this, it occurs over a couple days, that puts stress on the butterfly in a lot of different ways. The flip side of that coin is when that happens, if you start putting butterflies on in higher volatility, you can put them on with a really, really good reward to risk ratio. So while this sell-off was taking place, I was loading up more and more butterflies in my account, and those positions are virtually all in various levels of profit at this point. And if volatility decreases a little further here in the coming days, those will become more profitable. So anyhow, that's kind of where we're at on this particular trade, the start to finish trade. And next week, one way or another, we're going to see a wrap up on this thing. So stay tuned.